So I have Carley here, and Carley, I don't know, I'm just a space cadet lately. It's great to have you back. Happy New Year, even though it's March.
Thank
Good
you,
to
Dale.
have
Good to
you.
be here. It's good to
Yeah,
be here.
so wow. Let me ask you, do you like these markets, Trump 2.0 compared to 1.0?
I mean, so far we haven't gotten bulldozed over. So I will say
Okay,
for us, it's been a positive. I think the big difference is, let me just share my screen here.
sure.
I mean, the first time he was elected, nobody knew what to expect, right? It was just kind of
Right.
surprised everybody. No one knew what was going on. I think this time around, a lot of that stuff was priced into the market already. And to be honest, I think the market's got a lot of it wrong. So, for example, like the part of the Trump trade was hedging inflation, which meant buying commodities, selling treasuries. And
Yeah.
not only are we unwinding that, but I think we see like a complete reversal of that.
Reversal.
Yeah.
Okay.
So that's where
Okay.
we're at.
Okay. So you're looking for 50 crude WTI here.
I am. So
All right.
obviously the March 2022 highs were an
Yeah.
anomaly, but we've really been in a sell the rallies mode since then. I know most speculators are trying to buy the dips, but the
Yeah.
reality is selling the rallies has been the way to go. And we're coming up against some support at 65. This has held for years. I don't
Yeah.
think it's going to hold forever, especially with this administration. The last time Trump was in office, oil was trading 40 and 50, not 70, 80. So I think we're just kind of entering into a new phase. And oil's not the type of thing you can just uh, magically turn on the spigots for, and it appears, as soon as you make that decision, there's infrastructure time and cost and those sorts of things. So it's a time thing. But as we all know, markets are mental, and I don't think the market's going to wait for all that oil to come online. I think it prices in advance, just like markets do. And so I think we eventually, sooner rather than later, break 65, and I think 50 is the most likely target. So that's what we're looking for.
Do you think that the one fly in the ointment could be some type of Middle East problem? I've been reading
Hmm.
about Iran's move to, uh, their
Hmm.
progress on processing uranium. There's even people saying they already have a few nukes.
Sure, obviously, those are wild cards. I
Yeah.
will say that each of these rallies occurred on some sort of Middle East turmoil news, and you can see they get smaller as time goes
Right.
on. And
Compressing.
you can't see it in this chart, but what we noticed when we compared the price action to the COT report, which is tells us who's long, who's short, it's issued by the government.
Yes.
Every time speculators went long on these Middle East turmoil fiascos,
Yeah.
they were a little less aggressive each time. And so speculators have kind of they've probably been burned too many times on that type of headline, and so they're not as willing to put money to work. So unless there's something really, really major, I believe that the most likely scenario is continue to sell rallies and market dribbles lower.
Okay. How are you approaching it? What kind of option strategy?
Um, so we've been like on the spikes, we do things like sell calls and then buy put spreads. But now we're sitting on support. It doesn't really make any sense to have short calls out there or to be short futures or do anything aggressive, not in our opinion, because that's just not how we approach it. So what we have on is butterflies.
Yeah.
Um, I wonder if I can find it real quick. Let me see.
So butterflies, is that a put and a call where you're taking in premium on both sides of a range?
That's not it. Um, Shoot, I should have had something prepared for that.
Uh,
But
that's okay.
basically what we're doing, nope, that's not it either. Anyway, basically what we've done is we're using the May options. We bought 70 puts, we sold
Okay.
265s, and then bought the 60s. So we've got a spread between 70 and 60 is kind of what it works out. And so we can make as much as 5 grand. The risk is limited to about 550, I think is what we paid to get in. So that's what
Nice.
we're doing. Yeah,
Really nice structure for that kind of payoff. And the risk
sure.
is five,
It's only
500.
500 to make maybe 5 grand. Now the odds of making the full five
Yeah.
grand are pretty slim because you got, like all the stars have to align. So we're not really going for that. But if we could peel off,
Couple
you know,
grand.
Exactly. Couple grand, we would be delighted because it's such a low risk, low reward. The reason we do it
Yeah.
that way is we don't want to have like if we might be wrong, this is our
Yeah.
consensus, but that doesn't mean we're right. So if it holds
Exactly.
65 and bounces back in our face, who cares? We're only at 500 at risk. And what we would do is if the market rallied, we'd buy back our short puts and hold on to the long puts and hope that it rains. So
Okay.
that's the plan.
So guys, if there's many ways to skin a cat with option positions and
There
be
are.
able to sleep at night.
Correct. That's the goal.
Right. And
Yep.
the hesitation of taking home leverage positions
Mm-hmm.
can be, this is an alternative. So you want to
Mm-hmm.
learn option trading on these markets. Here's your person.
Yeah. I
So,
mean, trading is a very stressful and emotional endeavor. In my opinion, using options just takes a lot of the edge off. And so most people are prone to make better decisions when they're not under stress. So that's why we do it.
okay. All right. So
Okay.
what's this?
Okay.
Oh,
Let's
oh,
look
here we
at
go.
let's look at gold here. All
Okay.
right. Um, literally everybody's
Long.
bullish gold.
Yeah.
Everyone's bullish gold. We went short a week or so ago and took profits on Friday. Luckily we did
Yeah.
because we're right back up. But we'll probably do something again with options. Again, maybe sell some calls, buy a put spread. The last round we were able to sell 33.50 calls. So we're talking, we can be right by $400 and not really get into too much trouble. And then we use that money to buy 2,800, 2,700 put spreads. So $10,000 payout, free trade because we've collected enough premium to pay for our long option spread. But there's lots of margin and risk above
Yeah.
33.50. So that's how we had it structured. And we'll probably just slap it right back on here if gold gets a little higher. I know it's an unpopular position, but I think gold's kind of a dead man walking. I really do.
I like that weekly divergence.
Yeah,
We need some divergence on the shorter term time frames. I think
right.
uh, you know, what's a
Yeah.
daily? Do you have the daily? Are we confirming if we
Um,
make a new
I,
high?
I can pull up the daily, sure.
No.
So,
So even if we went to
mm,
the top of the channel,
mhm.
I don't think we're going to take out that high.
On the RSI, yep, I think
Yeah.
you're probably right. It's really,
Yeah.
really sluggish. I would love to see, honestly, I'd love to see 3,000. I think that would
Yeah.
be, we would really dig in and get aggressive on shorts up there.
Yeah.
Um, it's going to be interesting. This is the monthly chart. I was showing you the weekly before, by the way.
Yeah.
And I think this market is almost identical to the 2011 market. You can see we had three big waves up and then 2011 it peaked out and it took a decade to get back there. Now, is it going to
Uh,
take a decade to get back to these highs if we are in fact topping out like I think we are? Who knows? But even if it takes 5 years, I don't want to be there for that. So
yeah.
so here's
Okay.
what I've got. I think we're in the third wave. I think it peaks out somewhere around 3,000. Now this is not this is an art, not a science. Maybe it's 2,950, maybe it's 3,100. I don't
Yeah.
know. But in that ballpark, I think you're probably going to be better off. If you made some money on the upside, that's fantastic. It's really time to protect it. We're really encouraging people, especially people holding the physical metal.
To
It's
switch to silver.
well, oh, I'm going to show you a chart in a minute of gold and silver.
Okay.
No, to really just hedge your risk. It's really hard to sell physical gold. I don't think people understand how hard it is. Like
Yeah.
if you're someone that has a bar or some coins, just a handful of them, or maybe even a trunk full, it's probably not that big of a deal. But if you have any type of size, it's really, really hard to sell it. It's very illiquid. People would be shocked.
Yeah. The
So just
spreads.
yeah,
Yeah. And
it's
they know if
wild.
people are selling, they're desperate.
Exactly. So the best thing
Yeah.
to do is if you are holding bullion, just go into the futures market, sell a futures or put an option spread together to protect your prices. And then you can shop around because if you have a decent amount of gold, you're gonna have to shop multiple buyers, which is a big pain in the butt.
Yeah. That's
Um,
an
so
Indian. That's a real nice contrarian trade. Have you
yeah.
backed it up with COT stuff?
Yes, yes. So most people so we follow a sentiment, it's called bullish sentiment index, and it basically polls in industry insiders. And about last I checked, I think one comes out today, but it's probably somewhere around 73 to 75% are
Bulls.
bullish gold. And that's lopsided. You don't want to see those kind of numbers because that's usually you're in the last stage of the rally. And then on the COT report, it's the same thing. Now, COT report isn't actually wildly extreme, but there's enough people long here that we're kind of matching some of these other highs. So it's very possible that most of the buying power has already been employed and everybody's long and caught. And if it turns over, they're going to be caught on the wrong side. So that's kind of what we're thinking might
Yeah.
happen.
Could there be any event that would cause a central bank to liquidate some of what they bought for a while? Or
Central
they don't
banks
do that?
they don't really liquidate. They buy and they hoard and then
Yeah,
they just
okay.
sit on it, which is pretty interesting.
They
I'm not
used
sure
to
what the
sell
end
it.
goal is.
Yeah,
They
they used
used
to,
to.
but
Uh,
not anymore.
right. What the end goal is hard to say because I mean, I've been kind of saying this on social media and on TV. The US has a whole bunch of gold that they're just sitting on. They haven't even marked it to market, so we're not getting any type of benefit whatsoever on the books. And we're not, I don't
Well,
think it's a bad idea to,
they're talking about revaluing it and putting it on the
right.
books. Do you buy that
They
story?
should. I think they should at least revalue it. I'd go a step further and I'd sell it. I mean, what good is it doing? It's just sitting there collecting dust. I know nobody wants to say that, but um, nobody can buy, like you can't, it's almost impossible to fully liquidate something like that in a short amount of time. So it's really
So
not
why
an
did they
asset that's
ship all this gold back from Europe to the COMEX?
the idea is there's a lot of people that think that and this is what's crazy too, because we don't know, are the tariffs going to apply to gold or not? So a lot of people assumed that gold in the US is going to be more valuable because you don't have to pay the tariffs bringing it in. So
Okay.
once the whole tariff thing started coming out, the gold in New York, like on the futures, started trading $20, $30 to a premium than London. And,
Yeah,
then this all, yeah,
the
to
lease
be,
rates went up,
yeah,
everything.
I mean, maybe people are smarter than me. I don't know. But to be honest, I feel like humans are very emotional. And I think sometimes they act first and then think it through later. And I think that's what's going on, to be honest.
Do
I
you
think
like
it's
dogs?
crazy.
Do you like dogs more than people?
I I do.
Okay.
I do.
Everyone raise their hand if you like
Yeah.
dogs more than people. Anyway,
All right.
all right. So
Okay.
that's a real interesting one there, Carly.
Yeah, so this is gold to silver or silver to gold. Most
Right.
people look at this as a ratio. So,
I'm still seeing the gold chart though.
oh, mm,
Monthly, gold monthly
are
chart.
you really? Okay, hold on. Let me
Yeah,
change my sharing. Sorry.
no problem. Live TV. Because I'm thinking maybe it has a 95 in it, but I've even told people if it wasn't such a hassle
Okay,
to sell
there
their
we go.
gold and buy silver. Okay, so
It is.
you had,
Okay.
okay,
Okay, sorry about that. I didn't realize it
that's
didn't switch.
all
All right.
right.
So this is gold to silver. The ratio is somewhere around, I'm not looking at it in real time. It's changing. It's
92.
in the 90s. Okay.
Yeah,
Um, 70 might be a more normal area. So a lot of analysts are out there saying, well, the most likely, everyone assumes silver has to catch up to gold. That's kind of the
right,
assumption.
right.
I'm not buying that. I'm
Okay.
actually, because if we saw like in 2011, again, I mentioned this is a lot like 2011. I'm seeing so many similarities. In 2011, it was silver that outperformed gold, and you didn't see gold catch up to silver. It actually was the beginning of the end, and then they both rolled over and had a decade of
Yeah,
just pain and suffering. Again, I
lost
don't know if
decade.
it's going to be a decade of pain and suffering, but I think we're going to get something similar. I think we're probably like in the last hurrah. I don't think silver catches up. I think they both roll over, and maybe silver outperforms, like maybe it goes down
Holds
less.
up. Yeah,
Yeah,
right.
but
Okay.
I think we're going to see something like this somewhere over here. So again, I can't see the future. All I'm doing is looking at all the patterns I've seen in the past and trying to figure out what might happen next, and that's what I think is going to happen.
Okay. Why don't we address the elephant in the room? Stock indexes.
Okay, we could do that. Okay. Um, I have a really uncomfortable feeling about the stock indices. I've been talking about this for a long time. I think that we've produced We've manufactured prosperity through
Yes.
basically pumping money into the economy. And I think that's explains all of this. I know we would like to talk about, yeah, but AI and yeah, but this, and that's part of it, but I don't think that explains the magnitude of this. This is really just, these are stunning numbers that we're seeing. And the crazy thing to me is, if you go on social media, everybody thinks it's the end of the world. And look at, we're literally like 6, 7% from the all-time high.
Right.
We're still, in my opinion, way out of bounds. Relative to fundamentals and historical norms. Historically, we should see this market probably in this type of trade range. So 45 to 3,500, not 65 to 45. And I think even if we saw 45, people
Oh,
would really lose it. Yeah,
they
would really
would.
lose it.
I have
And
49.
uh-huh,
Let me ask you because I know you follow sentiment, and I
hmm
was reading that this is the most unusual top because
yeah,
tops are usually fraught with
hmm
euphoria
yeah,
and bullishness, and
hmm
this was the most bearish at any top. It's like
yeah,
everyone got it right. They were bearish
right,
at the top, and the bulls were using that as a rationalization to
yeah,
stay long.
right.
What are you doing with that information? Does that mean that there's
hmm
going to be one good rally so that you know take
hmm
away the put premium maybe into option expiration
yeah.
in S&Ps?
Um, we've seen sell-offs this time of year before. Like this is a pretty good example. This is COVID when it
Yeah,
usually when you're like the February, March time period can be pretty dramatic.
yeah.
I would love to see us go back and retest highs and that sort of thing because I'd like to get some more things
That's
on.
why it's not going to happen.
It's not gonna, I don't
Everyone,
think it's gonna happen.
yeah,
I think it's done. Honestly, I think we get something like we saw in COVID where we go into the March expiration and it's just a bloodbath.
a
I could be
crash.
wrong. Yeah,
Yeah,
but I think that's kind of there's a pretty good not well, let's say there's a better than 50-50 chance that happens. And that for that type of scenario, that's pretty high probability. Um, yeah, I don't know. It's
okay.
it's just odd. We'll see. There's a lot of
Are you
leverage in the
do
system.
are you doing anything with any kind of option spreads or
We had encouraged clients to hedge with like basically sell calls, buy puts, that sort of thing. Honestly, we don't have as much on as we wanted to. We were got a little greedy. We were looking for 6,300 to get aggressive and it just didn't
yeah,
quite make it. So it
yeah.
is what
A
it is.
lot of people
Mhm.
yeah, a lot of people are looking for 64. They're
Yeah.
still waiting for 64.
And
And
they
and
might be
and,
waiting a while.
and some are still looking for 7. But I've seen a case we could go to 4900 and
hmm
then the Fed really gets the bazookas out. And then we have a rally back half of the
Yeah.
year to new all-time highs, 7,000.
That could happen.
Yeah,
I don't know. We'll see. I mean, I'm thinking 4,600 is probably our
okay.
target. I wouldn't be shocked to see the 3,000s. I know that seems impossible, but it's not. We've seen those sorts of things before. So we'll just have to play it. It won't be boring. We'll just leave it at that. It's
Yeah.
not going to
So
be boring.
maybe Carly, instead of new highs, maybe
hmm
traders, if we're lucky, get some type of low in here
hmm
after the announcement and then have a
Yeah,
2 week rally,
right.
maybe halfway back like it did yesterday. That
Sure.
was
Yeah,
halfway back in 3 hours, basically. That was halfway back,
it was. Yeah.
right?
Yep,
Anyway,
yep. Bear market
so
balances are big.
uh, if you want to learn about options and across the board, Carly does it. Uh,
Mhm.
how they get in touch with you, Carly? Because
Best place to go is decarleytrading.com. You can also find us on social media. So if you're on X, it's at Carley Garner's my handle. But if you just search for Carley Garner or DeCarley Trading, you'll find us. But this is our website. You can sign up for a free trial of our newsletters, and there's all kinds of free information there. So even if you don't choose us as your brokerage, you might get a little bit of a education. So
and one thing that's important in this environment of scams everywhere, right? They're
right,
regulated, okay?
we are
Yeah,
very
I
much so.
mean the NFA comes in and you know, they they do
This is
an examination.
Yeah, this
O-
is how you know. right at the bottom of the.
Yeah. Yeah, there you go.
Plenty of
There's a
risk
risk disclosure.
disclosures. Everything you see is going to have a risk disclosure. Yes, we're very regulated, which is good. It's good. I'm not
What's
complaining.
your minimum account, Carly?
We can open it with as little as 2,000. So you can't do much with 2,000, but we could open that account, and we do all the time.
Okay, so for the short stops out there,
Hmm.
to take a flyer or something.
Sure.
So, all
Yep.
right. So, Carly, appreciate your looks. Very interesting what you're seeing in gold, and really everything.
Thank you, Dale.
Does the dollar look finished to you? You don't have to.
It does. It does.
It's
I can do it
done,
real
isn't
quick.
it?
I think it's done.
Okay. And you
Just
know
quick.
what?
Yeah.
It's getting no safe haven bid when the market's selling off.
Yeah. No, I think we're
Do it.
going to at least 100, which is the bottom of the range, and probably
Yeah.
the 90s. So
Yeah. All right. Carley Garner, everybody.
thank you.
Follow her at Carley Garner on X, and go check out her website. Carley's also an author. All right. So if you want to learn, you're going to get a good education from her about options. So that's a wrap. Remember, don't just count your puts and calls, count your blessings. And see it. She is Laura. So people enjoyed it. Thanks, Carly, my trading warrior sister. That's a wrap, everyone. And good hunting the rest of the day. See you tomorrow. And thanks again, Carly Garner. Adios.
Thanks, Dale.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.